The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Well, we have the Federal Reserve is going to be making their announcement today at 2 p.m. Eastern Time. The planet Mercury goes back to direct motion this morning. So that should be a big help. That means they should make the right decision, because you shouldn't make really big decisions when Mercury's retrograde, so that gives them a little bit of a break here, if that means anything. Whether that happens or not, we'll have to wait and see. I have some interesting information about the bonds that we'll cover in a little bit, but first of all, I wanted to show, the gold and silver. As you recall, yesterday we were looking at gold down around that 13.14 level. We got down to 13.11. And then, of course, we rallied up to the 13.33. We're still in a bear market. This is nothing more than a retracement of that. However, we'll take a look at silver in just a little bit. You'll be able to see that it's been the stronger of the two, because on the pullback, it could only make a 382 retracement, whereas gold went down and made a 78.6 retracement. So that could be some really positive. We really need silver to get above $20 an ounce and gold above $13.50 in order to turn, all this stuff around. So we'll see. Yes, we do have the the end of summer is today at 10:21 in about an hour and a half. So make sure you get your bikinis on before that time comes, because you can't put them on again until next summer. At least that's what the seasons tell us. Anyway, the Mercury going back to direct motion will be, something of pretty good significance. If you remember, Mercury went retrograde on the high of the market, which still remains the high on the New York Stock Exchange Index, on May the 19th. We had a new moon that day. We also had our friend Norm Winsky on from Astro Trends talking about that particular fact right when we were making a beautiful ABCD pattern in that index. So, that worked for that particular time. And remember, what I try to do, folks, is the astrology part is an adjunct to what I do. I don't understand a whole lot of it. I was able to realize that early in my life, that I had to be really careful, because there were some really smart people out there that knew a lot more about astrology than I did. So I tried to, take the best bits and pieces of it and match it up to what the patterns are doing. And that's what I really try to do when I'm working here with you folks into TFNN. And it's the reason why I have all the guests on, because we have some pretty smart people, and they've given us some great information. But all I'm doing is I'm looking at the patterns. I'm a pure technician. That's what I really try to do, and that's what I do. Okay, let's get on to the rest of the markets. Let's take a look at the German DAX. We'll take a look at this, and then we'll get into the bond market here, because we've got the Fed acting today, and it's going to be pretty exciting no matter what. But we've had some interesting moves here overnight in our market, but some of the others not. As you can see here in the German DAX on the 16th, when we had the lunar eclipse and full moon, we had that 135 pattern, as you can see in the little red box there. That was right at the 78% retracement. We've now rallied just a little above the 50% level. We could easily, with the Fed out there today, you could make any number you want, because, this is crazy time at 2 o'clock. About 2:30, after they're through with their announcements and stuff, the markets will settle down, and you'll see it just a little bit better. But This is what the German DAX is doing. The S&P is doing pretty much the same thing. We rallied up again to that really strong resistance up in that 2146, 2155 level. I think our overnight high was at 2144. We're a few handles below that right now, but frankly, it's going to be really crazy at Fed time like it usually is, and that's really what's looking at. Yeah. Bob is saying that gold made a perfect Gartley down there at around 89% level at 1310, but that was on a very, very fast market. I happen to be. Fact is, I should get into this right now. We've only got a few minutes, but last night the real excitement, folks, started when the Bank of Japan came out and decided to, go back to their quantitative easing. And I want to put this chart in here to let you folks look at it. I was making a video for my customers, my students and stuff, and I was saying, that this thing is getting ready to have a heck of a move. And we took out the lows of the 13th of the 12th of September by just a few pennies, and then it rallied $1,600 straight up in the matter of about 10 minutes, and then for the rest of the time it's been coming down, and now we're already down to making new lows. So the thing that's important about this chart, if you'll notice the trend line that's in effect since September the 2nd, it's a perfect trend line. I mean, if you like trend lines, and this is certainly a perfect one, and it's 618 on the upside and 786 on the downside on the second swing, so that verifies that the trend line is absolutely correct. Now, if we take a little bit longer look at the Japanese yen here, you're going to see here that we're looking at something a little bit different when we're watching the longer term picture of this, and this is why we were trying to get short the Japanese yen. The problem was that when it hit that level last night at 102.76, it immediately dropped like 30 pips. You had to have your order just absolutely setting in there, and I'm in the midst of doing a video, and I'm saying, oh my gosh, then I realized that BOJ is out there, making their announcement, and it's better to stand aside when you have these real crazy things happen. But by the time 20 minutes after, it was, already on its way down, and all you had to do after that was just sell weakness, as you can see here from the long-term daily chart. That also shows that same trend line. You'll see that it was very, very similar, and it goes all the way back to the May area. So that's why it was such an important area. And this looks like we're ready to head lower yet. So we'll see how this ends up. Now, all of this is based on what they're talking about in Japan about their quantitative easing. And let's just take a look to see how that's been working for them. If we go here, when we look at the long-term weekly chart of the Nikkei, you'll notice that it bottomed in 2009 in March like the rest of the market did. It rallied up to 21,400. We're now trading at, as of today, we're trading at 16,415. It was up about 1.5% today with the news of their quantitative easing. But the old high in this, folks, was 39,900. That was on December of 1989. So this has been in a tremendous bear market for a long time. We've just had a 7-year rally in a bear market, and so just remember that the Japanese are buying all their stock. The government is. So they're in a quagmire, as they say in the trade. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next chart we're going to take a look at is the silver chart. As you can see, we pulled back to a 38% retracement last night during that Japanese move. And the market then, moved up quite a bit up, and there should be some pretty strong resistance in silver between 1970 and 1980. The 61% retracement comes in there. In addition, you also have a beautiful ABCD pattern that measures to that level also. So just watch that level, because if we get above $20 an ounce in silver and $13.50 in gold, this thing could really take off to the races. And we got a lot of things happening, folks, not just the equinox, which is pretty important seasonally, but we also have Mercury going direct today. So it's a lot of other things too. There's some other planetary things that Shane Smolian has pointed out, as has our friend Bill Meridian, and then also Arch Crawford, and then Norm Winsky. All of those things looks like a very, very interesting. Now, someone's asked a question about the Japanese yen, that it looks like it could be forming a Gartley pattern here down near this 100 level. That's true. We're in a very strong down move, but we've had this really wide bar today, well over 200 pips, which is a great deal. So if this is going to be a Gartley, it's got to hold this par level of 100. So the best thing to do, and it's really hard today, folks, with the Federal Reserve in here at 2 o'clock, because you and I both know that, during that time, people pull their orders, and it makes the market very illiquid. And you don't need to trade during that time. Wait till the news and all this other stuff is out. They'll always give you not always, but most of the time, you're going to get a pattern. If you're bearish, you're going to get a retracement pattern, and if you're bullish, you'll get a retracement pattern. So having no position is a good position. John Logan mentioned that. Steve Rhodes has mentioned that. Basil has mentioned that. also Tom O'Brien, and I have too. So wait until you get all your ducks lined up and make sure that that's what you have. Early in this morning, here in the Tiger Den, one of our listeners quoted Jesse Livermore. The fact that he did his best trading only when everything's set up the way he liked to trade. And I have read that book, Reminiscences of a Stock Operator, I kid you not, at least 50 times, because when I first started trading, there were very few books on trading, and that was one of the better ones. So it's a great book on the psychology and how to have belief in your own trading system and how to work hard to get there and all those things. It's a wonderful book. If you've never read Reminiscences of a Stock Operator, you really need to read that because it's really fantastic. It was actually years ago in the Chrysler Building up on the 35th floor. They had the offices of Jesse Livermore. It was in like a little library that you could go in, a museum. What I meant to say, you could go in and see the actual, places where the guys that actually chalk the prices up from the ticker tapes. It was really spectacular. We have some wonderful pictures if you're ever in the Chrysler Building there in New York. It'll show you some of those things that were going on during the 1930s that were really, really fantastic and a great part of our history. Anyway, get back to the markets. I want to show you something that I think is really important, and we talked about it yesterday just a little bit. This is Deutsche Bank. This is, as you can see, what's happening this week. We had a gap down. I'm just going to walk you through what's happening the rest of the week so you can see, what's going on here. Because as you'll notice here, we keep dropping 3 to 4% every day in Deutsche Bank. And, we're down now. If we take a look at it, I'm not sure where it's trading this morning, but as of yesterday, we were all the way down to the 1242 level. This is not a good sign, folks. This is the largest bank in Europe. It's the flagship bank of Germany. If we get below $11 a share, if you'll notice, I've got that marked here. That's going to be a 1.618 expansion. And if we do that, that's going to be the same type of pattern that we had with our old friend Lehman Brothers before Hank Paulson failed, to try to save them. Well, maybe he didn't try as hard as he should have because that was Goldman Sachs' major competitor, but he certainly did his best, as we know. But anyway, this is what really looks bad. It really does. And I happen to, bring this to the attention of some folks, and I had, fortunately, I've had customers, students that I've trained in 22 different countries. And I had several people from Germany call me and say, my parents have their money in a German bank, and in Deutsche Bank, and should we take the money out? And, basically, should they put the money in to other banks? And I said, well, it's better to spread your risk. That's the best thing, to see what you're looking at. The reason why I'm talking to you about Deutsche Bank today, folks, is they are the largest people that are exposed to derivatives. I mean, they are huge into derivatives. Not only that, they are in really heavy problems with cash flow and stuff. There's a reason why stocks are dropping. Remember, folks, the reason why we had the crash in 2008 was because we lost Lehman Brothers, and we almost lost Bear Stearns. They paid $2 a share for it, but it went from 156 down to 2. So you think these things can't happen? Well, they can. And, the banks never did anything different. They're still doing bad things. And you can hear what, John Logan was talking about with Wells Fargo. None of these guys ever spend any time in jail. I mean, J.P. Morgan pays, $16 billion in fines? And nobody goes to jail? I mean, come on. Let's, if you put a little jail time with this stuff, that stuff will stop. Until then, they have no skin in the game. It's not their own money. Why would they change? Okay? And Germany will never allow, you're right, Terry, they're not going to allow Deutsche Bank to go under. That don't mean, hey, look, they never let AIG go under. Do you know that? But it went from 172, it went from 72 and 3/4 to 53 cents. So that's a little bit more of a 10% correction. So you could get Deutsche Bank for $1.50, and I'll probably buy it. But remember, Bank of America got down to 3 during 2008. So, you got to realize that some of these things can be looking around. Is that correct figure that J.P. Morgan has had paid $42 billion in fines since 2010? Is that correct, Mr. Z? Oh my God, that's unbelievable. Wow. Holy cow. In excess of $42 billion, and no one has ever gone to jail. Wow. Therein lies the problem, my friends. Therein lies the problem. So we'll see what happens to some of these things. Okay, let's move on to some of these other markets. There's one that we missed the boat on, folks. We got to watch this one really carefully. We're going to have to cover it at the break, but I missed this buy yesterday by hair's breadth, and that is the crude oil market. I think we'll cover this when the break comes, but because I'm going to hear the music here pretty soon. But we got down within about 60 pips of where we wanted to look at it, and then it's had a tremendous move to the upside. The reason why Jamie Dimon got the bonus is because it wasn't $50 billion. See, if they'd paid $50 billion in fines, he wouldn't have got the bonus. So, what do I know? Anyway, I'm sure there's a reason for it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we have a caller from Toronto, Canada, one of my favorite places in the whole world. Edward, are you there?
Yeah, hi Larry, how are you?
Very good. What can I do for you, my friend?
Just have a question. I'm just looking at interest rates. So if the Fed raises the interest rates, there is a higher probability that the markets will go down. Of course, what we're looking at bearish scenario right now. But if that happens, the dollar index will go up, right? And
One would assume that, yes.
if that happens, then that will affect the yen to go down.
That's
But
correct.
wouldn't it be like more expectancy of a correlation that the yen usually will go up and dollar index will go down if there is a crash or a market going in the direction downwards, bearish?
You know, you're absolutely correct on your thinking on this, Edward, but I'll tell you, uh, you've asked yourself about four different questions about what could happen. And about 25 years ago, when I was working with Bryce Gilmore, I decided that by looking at the pattern of what I wanted to trade, that was the only thing that I could control. It's beyond my pay grade to try to understand, how the markets are going to react on an interest rate increase or not, because, they might increase interest rates and everybody thinks it's bullish because the economy is turning. You just don't know how it's going to react. So what I try to do is to react to what I see, and that's why I want to wait till after 2 o'clock today, to give me a better idea of what I see happening. So I try not to think too much. That's served me relatively well. But if you can work through that yourself, then you have a really big edge. But frankly, I have to go by what I see in the patterns. The patterns are saying what you're saying, that it should be bearish, but that doesn't necessarily mean that's how the market is going to respond to it. So that's my only caution that I have regarding that statement. But you're exactly right. The dollar should strengthen, commodities should weaken, and Treasury bonds should drop, and so should stocks. But we've seen this over the last 6 years that our quantitative easing could come in and change it all in 20 minutes.
In a heartbeat, yeah.
In a
And
heartbeat, that's
another
correct.
question regarding New York Stock Exchange. I'm just looking at the dailies, and it looks like right now we are basically testing about 38% retracement in a head and shoulders and a Gartley pattern.
That's correct.
So if that breaks, it probably will go to 5618,786. So it can potentially retest higher prices at New York Stock Exchange before it will go down. But if it will break the low of the New York Stock Exchange on a daily, it probably will continue the move down. Is that
That's
right?
correct. And most of that will probably be rectified over the next few days of Wednesday, Thursday, and Friday. And with September being our weakest month, especially this is the weakest month of the year, historically between September the 17th and the 24th, by Monday we're going to have a pretty good idea of where we stand, at least from statistical basis.
And from the point of view of the lunar location, and it also there seem to be a lot of things that can happen, right?
That's for sure. And then also, I take a lot of value to Mercury being in direct motion because, even the ancients years ago in Babylonian Samaria, talked about the planet Mercury on their stone tablets. So there must be something there that is very important about Mercury. And since it's our closest planet and has the shortest cycle, it's an 88-day orb. So that's a very good one to be watching. And so I use that as a sort of a trigger mechanism. Of course, with the Fed there today, they're going to be their own trigger. So my announcement is don't trade until 2:30. Give them a chance to get the report out, talk about it. Then you'll have all the traders in there making up their mind. You can take either side, either long or short, and probably be okay.
So there is a lot of volatility is expected
yes.
before the market will
Yes.
settle down and will take a definite direction, in other words, right?
Yeah, don't be concerned about how much money you're trying to make. Be concerned on how much money you could possibly lose, and you'll be far better off.
Hmm. Thank you for good advice. I appreciate it. Thank you, Larry.
Thank you. If I ever get up to Toronto, we'll have some tea together. Thank you very much for calling in, Edward. I appreciate it.
When you come, I will look forward to it. I'd like to take you for lunch or dinner.
Okay, thank you so much.
Bye-bye.
Okay. All right, folks, we're going to take a quick look here at crude oil. As you can see, we had price up and down in that ABCD pattern absolutely perfectly. It was 10 days down. The problem was it didn't get down to the level that I wanted to be a buyer. I wanted to be a buyer around that 42.50 level. We got down to 42.95. But if you'll take a look at this 30-minute chart here, you'll notice that we made a beautiful ABCD pattern over the last 5 days. This was after we were off the air at TFNN. It had made that, and then of course it had the rally up. Then we had the ADP numbers, and the market just rallied a little bit more than $2.50 a barrel, and went up to that a little above the $45 level. So watch if it backs off to that 44.50 level, folks, because that could be a real interesting spot, to take a look at the long side of crude oil, because this has a really good chance of making a major turn, and I mean a really major turn, because you've got these larger ABCD patterns that are in there. You're seeing the smaller ABCD patterns. You're seeing beautiful symmetry on the ABCD patterns to the downside in both price and time. They're just absolutely spot on, perfect. And if you look at the other markets, like the gasoline, which is part of the crude oil product, you'll notice that it made a 61% retracement yesterday and held very nicely. And if we take a look, of course, at the heating oil, it was even the stronger of the groups, because it could only do the same thing. It just basically came down and touched the 61% retracement, taking out the lows of 3 weeks ago by less than a half a cent. And, of course, it's had a pretty good rally from that time also. So that's telling us that there's some really strong support here in the crude oil complex. And if we take a look at the oil services index, you'll notice here that we'll be looking at a really nice 3-drive to a pattern here in the oil services index. We're very close to a 1.618 expansion, with oil being higher today. This is probably going to hold this level, but we'll see. But it's in a very, very bullish posture from a long-term perspective, because you're much, much higher than you were in January. You haven't quite made the 61% retracement, but we are getting close to it. So this would be one that if you wanted to be a buyer of something, I would certainly take a look at that. If you remember at the beginning of the week, we looked at McDonald's and Starbucks as potential buys, and both of those have held up above those numbers. McDonald's much better than Starbucks, but at least the patterns have held up as of the previous writing. So we got to take a break here. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to cover Treasury bonds next because, that's the largest of the commodities, and it's going to be really affected by these Federal Reserve decisions today or non-decision. But before we get to that, I have to show you this picture from Lambeau Field, the Packer game, how they made tribute to the veterans, from our soldiers, and it's just really an amazing picture if you get a chance to look at it here on TFNN. You're not going to see it anywhere in the news. Even ESPN didn't even cover it, but it was really a tremendous tribute to, our veterans, which we certainly really need to do that. I mean, I can understand when people don't want to do the national anthem or burn our flag, but we still need to take care of our veterans because they're the ones that make our freedom worthwhile, folks. So don't ever forget that. Liberty is not coming at a cheap price. Let's take a look at the Treasury bonds. As you can see here, we've come down and we're testing this 64 level. Last night, during the craziness that we had in the market, I'm going to show you that the Treasury bonds went down and took out the low by 2 ticks at that 164.20 level. We got down to 164.16. We've since rallied back quite a bit. A lot of volatility here, $2,000 up and down. We made a perfect 61% retracement, then rallied about $1,500, and then it dropped $2,000 into the new low last night during the Japanese announcement, and it really, had a tremendous amount of move. However, if you take a look at what happened with the German Bund, you're going to be really surprised because it didn't do a darn thing. It just stayed in the same area. Oh, what happened to that chart? Please, Larry, don't tell me this. There it is. Hold on. I just want to show you the same chart. As you remember now, what we did here in the with the German Bund, we went down in the bonds below the low of September the 13th by 2 ticks. As you can see, the German Bund did not even move. I mean, it didn't move at all. I mean, that's a pretty big contract over there. So somebody's really supporting this thing, and that usually means that they think interest rates are going to go lower. That would mean this thing would go higher. So I don't know if that means anything, but we'll be able to see in that. Mr. Z's asked a question about a trade in the bonds. I like the bonds from the long side. It worked okay. By the time this happened yesterday, I was watching the Japanese yen because of the wild volatility and also the gold because I happen to be involved in that. But the movements are so fast because of what happened in Japan last night that you just really, unless you had your orders setting there, you can't. There's no way that you can take advantage of it. I mean, and that's a very, very volatile time frame. So I don't know. I think I'll wait till after the report is out with Miss Yellen today and see what happens. And but that's basically it. You got to try to control your risk as best you can. And during times like that, you just really couldn't. I mean, I was literally doing a video at the time that this happened, and I was literally thrown off guard because it happened so quickly. Then I realized it was the BOJ in there, and it affected everything except the German bond. It affected the DAX. The DAX moved up 100, but the German bond didn't even move. And I double-checked the prices just to be safe that that's what we were looking at. So somebody's made a big bet that the interest rates in Germany are going to go down and not up. So we'll see. Anyway, we'll wait. Germany has a big problem with the millions of refugees they've taken in. I think it's wonderful that they were able to help them, but boy, they've hurt some of their own people because, they have to support these people. They don't understand the language. They don't have jobs. They don't have medical. So this is a really big responsibility, and that's part of the things. If you're going to help someone, you've got to be able to budget it, to be able to really do that. But it's sad that they had to leave their own country. But when you draw the line in the sand and people want to cross that line, what are you going to do? Not much else. Okay. Basically, what we're looking at here in some of these other markets, this will be all related to what happens at 2 o'clock. That's really the bottom line of what you're watching. If you get a chance to buy crude oil, it'll pull back down to the 44 level in November crude with the meeting today. I think that would be a pretty good trend. We're at 44.80 right now. That looks like it's very, very interesting. So I would kind of keep an eye on that. As far as the Japanese yen versus the U.S. dollar, I would be watching that at the par level of 100, because if we get below that par level, that would set up another price objective on the daily chart at around 95, and that would be a long-term ABCD pattern in the Japanese yen from the high we made, at 126. So I don't know if it's going to happen today or not with all this stuff that's going on, but it could. It could easily do that. The key levels to watch in the gold and silver, of course, we mentioned it was $13.50 in the gold. That's $22 from where it is right now, which is no big deal if the Fed's out there and buying comes in. $19.80 has been the high, I believe, in silver. It needs to get above $20 an ounce in order to get it moving, and then you'll have a better chance of seeing what's happening, with these particular instruments. But remember, it's 2 o'clock today. Mercury gets off of retrograde here in about an hour and a half, I believe. And then we have the equinox here in about 42 minutes. That'll be the start of the fall. I imagine they're going to be getting snow up in the Boston area today. I hope Basil's going to be okay. I shouldn't say that because it's going to be about 90 here in the desert. But the summer is over, folks. We're starting fall today. The days start getting shorter, so keep in mind that we're heading towards the winter months. Anyway, remember that September is the cruelest month in the stock market, and this is the most bearish week between the 17th and the 24th, and we've only got a few more days for that to finish up, and so we're going to have some interesting times here. So we'll watch these things very, very closely. We've had a question about one particular stock, and that is the stock of Apple. Apple's been had a move up to that 116 level, which we mentioned several times. That was a major, major number up there. There were 4 or 5 ratios coming together, long-term downtrend numbers at that 116 level. It's a 61% retracement, a 1.27 expansion, and a couple of smaller ratios based on the 4-hour chart. So there's a lot of resistance at 116 in Apple, but if we get above it, then you're looking at something a lot better. Overall, we're still looking at sort of a negative market. If we looked at the Dow Jones as it relates to the Bradley model, you notice that we're not expected to have a bottom in this until right around election time. So if you remember, one of the reasons why President Obama was elected in 2008 is because the stock market was crashing, and they blamed it, of course, on the Republicans. And that's a good thing to do. Blame it on whoever you can. But that's what, they wanted change, and they got change. But that's, that's what happened. So remember that the stock market doesn't always move in the direction of the economy. That's a big thing to remember. That's been in a lot of books over the years, and it's very, very interesting. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this next chart was brought to my attention by one of our listeners here in the den. It's basically from the Federal Reserve Board. The chief economist for Deutsche Bank brings it to our attention. All I did was I marked the 3-drive pattern. You can see drive 1, drive 2, drive 3. This is household net worth as percentage of disposable income. What this is saying, this should be turning down. And if this is the case, this is not going to bode well for the economy and also, of course, for the stock market. Those gray areas that you see there are recessions. And, we have not had a recession since 2007 and 2008 area. But this could be a very interesting one. Now, if you like three drive to a patterns, folks, if you like three drives to a pattern, and let's just go back in time now and pretend we were here in October and December of 1975. Look at that chart. Between 1965 and 1975, you're going to see an absolutely perfectly symmetrical three drive to a bottom pattern. In December of 1975, we had two bottoms, one in October and one in December. Those were major conjunctions and oppositions. That's what got me really heavily involved in looking at astrology, and we're seeing the exact opposite of that pattern happening right now. This pattern also happens to be a 1, 2, 3, 4, 5 expanding triangle along with the three drive to a top pattern. So we have to pay particular attention here to this particular chart. And we can see in the stock market, all we've been able to do is make a 78% retracement back on the New York Stock Exchange Index, even though we did make new highs in the S&P and the Dow Jones and the NASDAQ. That's, you're only talking about a few stocks there, but the overall stocks, the New York Stock Exchange, we did not make new highs, and it looks like we are going down some around this level. But with today's Federal Reserve at 2 o'clock, don't do any trading till at least 2:05 or 2:30. At least till you get the craziness out and liquidity comes back. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.